Hello, good morning. You're watching Market Cafe on ET now with me, Vinny Motiwala. Along with me is Ankita Saxena as well. Ankita, very good morning to you as well, and good morning to all our viewers as well. But markets not doing anything much, at least the global handover in terms of the US markets were quite high and dry in trade as well.
Absolutely. Good morning to you, Vinny, and good morning to everyone. Now, Vinny, the markets were closed yesterday for European markets, but the US markets were a bit mixed. Yesterday the S&P 500 ticked slightly higher as investors are looking to the key inflation data that's likely to come out today. Very busy week for the US markets. The broader index rose 0.1% in trade. The Dow Jones Industrial Average added 101 points. Meanwhile, the Nasdaq Composite was bucking the trend, inched lower by 0.03%, largely flat but in the red as tech stocks really struggled, with shares of Apple falling 1.6% and Google parent Alphabet sliding 1.8% in trade. Tesla shares also fell 0.3% after the company said that it will cut prices again on some electric vehicles. Meanwhile, the shares of chip makers rose after Samsung said it would cut production to support prices. Micron Technology shares gained 8%. Now, investors are in for a busy week of economic data, including the latest consumer price index and the producer price index data for March that's due on Wednesday, which is today, and Thursday respectively, which will help determine if or when the Fed will pause or end its rate hiking campaign. All eyes on the Fed, and of course we will be tracking it very closely and bringing to you all those details. Let's look at the European markets. European markets was shut. It was a 4-day long holiday, so it was a truncated week for them, and Eurozone retail sales data is expected as of today, so that's something that we will be closely tracking as well, Vinny.
Absolutely, but let's just look at what crude oil was doing. And yes, crude oil markets were open even yesterday. When you look at it, yesterday they were a bit sluggish, not doing anything exciting in trade. This morning we are seeing the Brent crude oil prices have actually started inching up in trade as well. Overall, market participants are actually weighing in terms of the supply cuts that may come in from the OPEC Plus that would tighten in terms of the global markets against the concerns of further interest rate hikes. So that's a story that is playing out for oil prices, the supply-demand situation. How will that actually turn out as well? Now, Brent crude oil currently trading around the $85 per barrel mark, while the WTI crude oil is trading below the $80 per barrel mark, somewhere near the $79 per barrel mark as well. So yes, keep an eye out on that, because oil prices on Monday had fallen. Right now, they're almost flattish with a slight bit of a positive bias and a trend coming in for the Brent crude oil as well as the WTI crude oil.
All right, then let's quickly look at the events that we need to keep a track of as of today. We have the China CPI and the PPI number that is likely to come out today. We also have the IMF World Economic Outlook that's going to come out today. Also, we have the Q4 earnings. We are now beginning with the earnings season, and we have the Q4 earnings for Delta Corp. And of course, we have Varun Beverages. Now, today is the last day to buy the shares to be eligible for the dividend for Varun Beverages. So these are the events that we need to keep an eye out for.
Absolutely, Ankita. Big events on the domestic front, but let's just look at what is happening in the global world. What are the top headlines that are being made over there as well? And let's start with the World Bank chief. The World Bank President David Malpass sees that India's GDP is rising 6.3% in fiscal 2023 and 2024. Now, he was speaking to reporters when he also said that the World Bank sees the GDP of United States expand 1.2% this year, which actually indicates a downgrade from the 2.1% in the previous year. David Malpass has also said that the global growth will slow to 2% by the end of 2023, and this as advanced economies keep absorbing the global capital situation.
And Apple's global computer shipments fell 40.5% on a year-on-year basis in the first quarter of 2023 amid a broader contraction in consumer demand. Do remember, overall global computer shipments fell 29%, with Apple taking the largest hit. Apple's MAC shipments were almost cut in half, down 40.5% from 6.9 million computers in the first quarter of 2022 to just 4.1 million in 2023 so far.
And on the other hand, we have Japan's new central bank governor, Kazuo Uda, who said that he will communicate closely with the government and guide the monetary policy flexibly, warning of a high uncertainty over the economic outlook. Now, Uda added that there was no immediate need to revise the statement, under which the central bank targets a 2% inflation target at the earliest date possible.
And a quarter of century since the signing of a peace deal that largely ended violence in Northern Ireland, British Prime Minister Rishi Sunak said efforts had to be intensified to restore the power-sharing government central to the accord. Meanwhile, US President Joe Biden is set to fly to Northern Ireland on today to attend events marking the 25th anniversary of the Northern Ireland deal.
And just days after dozens of classified Pentagon documents about the Russia-Ukraine war were leaked on social media platforms, Kyiv has amended some of its military plans. Now, Ukrainian officials who claimed that the leaked documents contained fictitious information and looked like Russian disinformation campaign. However, reports suggest that the Pentagon has admitted that the documents were real but seems to have been altered in places.
And United States and Philippines have launched their largest combat exercises in decades that will involve live fire drills, including a boat-sinking rocket assault in waters across the South China Sea and the Taiwan Strait. The annual drill will run up till April 28 and involve more than 17,600 military personnel. Remember, it will be the latest display of American firepower in Asia.
Okay, that was all your global handover, global headlines that were making the news overnight as well. On that note, we're going to slip into a very short break, but don't go anywhere. We'll be back with more domestic news after this break. Welcome back, and you're watching Market Cafe on ET Now. While obviously we did have a sluggish handover coming in from the US markets, but let's look at what the Asian markets are doing this morning as well. When you look at it as of now, they have opened up a bit in the green as well, what we're seeing coming in for the Asian markets. Let's look at the ASX 200, which is the Australian market. That has opened up with gains of around 1.36%, standing on the positive side, strong rates coming in over there as well. Nikkei 2, that's Japan's Nikkei, that is also up over 1%. Kospi holding on to gains of more than 0.7% in trade as well. Let's just look at what is the Kospi doing is, yes, 0.8% as of now as well. So keeping an eye out on that one as well. Nifty as of now, that the Nifty, SGX Nifty is indicating a bit of a muted start that is coming in for the Indian markets as of now. Nothing exciting there. Yes, but Bank of Korea has actually held the rates. It's central rates, which we look at it. So they have once again held those rates. So we're keeping an eye out on that one. But Asia markets seem a slight bit of a positive start that has coming in for the Asian markets. Positive views coming in from Nikkei, ASX 200, Kospi, all of them trading in the green.
All right, then that was where the Asian markets are at currently. But moving on, Project Tiger, which completed 50 years of its implementation, has seen a dramatic turnaround in the big cat's numbers, where it crosses 3,000 tigers in 2022. So how did we manage to achieve this feat? Now my colleague Vikram Oza is here to explain it for us.
The roar of the tiger is back, and how? The fifth cycle of India's tiger census has brought cheers. It has brought optimism to India's efforts to conserve the big cat. In the past 4 years, the tiger population in the country has increased by 200, while the overall tally stands at 3,167 as of year 2022. These figures were released by the Prime Minister himself at the International Big Cats Alliance in Mysuru. The three-day conference marks 50 years of Project Tiger, which is India's flagship tiger conservation program. It was launched back in the year 1973. The conference is going to focus on protection and conservation of 7 major big cats of the world. Those include tigers, lions, leopards, snow leopards, pumas, jaguars, and cheetahs. These efforts to conserve the big cat picked up pace when in 1970, the IUCN, that's the International Union for Conservation of Nature, declared the tiger as an endangered species. Then widespread hunting, Widespread poaching all had reduced India's tiger population from what was over 40,000 at the time of independence to just 1,800 in the year 1972. So a year later, the then Prime Minister, Indira Gandhi, launched Project Tiger at the Jim Corbett National Park. Back then, the program included 9 tiger reserves across several states covering a total of 14,000 square kilometers. 50 years later, there are now 54 tiger reserves spanning a total of 75,000 square kilometers. And not just that, 75% of the world's tiger population can now be found in India. The tiger population too has steadily climbed up. It stood at 1,411, and this was in 2006. In 2010, it went up to 1,706. Then in 2014, it rose further to 2,226. And in 2018, the number that was reported was 2,967. Also, there's positive news for other big cats. Efforts to conserve the Asiatic lion has seen its population grow from what was 525 in the year 2015. Now, in 2020, it's gone up to 675. Even the leopard population has gone up 60% in the last 4 years. And recently, you'd recall that Prime Minister Modi released those 8 cheetahs in MP's Kuno National Park.
Okay, thank you so much for that, Vikram. But on that note, let's just slip into a very short break. Viewers, SGX Nifty indicating a flat start as of now.
Welcome back. You're watching Market Cafe with me, Ankita Saxena, and with me is Vinny Motiwala. And it's now time to go domestic. Neogen Chemicals announces tech transfer arrangement with Japanese major MU Iconic Solutions Corp, obtaining the license to manufacture electrolytes in the country. Now, the deal is likely to help meet India's lithium-ion cell demand via MU technology. My colleague Lisa joins in with all the details. Over to you, Lisa.
Well, yes, Neogen Chemical has announced an agreement with MU Ionic Solutions Corporation, which is a Japanese-based JV of Mitsubishi Chemicals. Well, this is to acquire a confidential manufacturing license to produce electrolytes. And this is in line with the this announcement is in line with the story that ET Now broke just yesterday before the announcement. Well, they have a license to produce around 30,000 tons of electrolytes, and this will help produce 35 gigawatt battery, and the commercial production for the same will start in 2025 onwards. Well, the management commented that the electrolytes will be sold only in India. It will be used in domestic manufacturing, and the technology will be applicable for both types of battery, that is LFP as well as NMC. Well, it is important to note that the company recently announced a 450 crore capex for electrolytes and salt, and it was for 10,000 metric ton capacity. And for this, the management had guided around 1,000 to 1,200 crore revenue by FY 26-27. So after this current agreement, now the management is looking to revise the revenue guidance as well as to revisit the capex guidance. Well, the analysts believe that this is a landmark deal which is positive for Neogen Chemicals. However, it's too early to devise any financial implications of the agreement. And now with this action in battery, that has begun to gather pace, and it will also help the other battery manufacturing companies like Gujarat Fluorochemicals as well as Tatva Chintan.
Okay, Lisa, thank you so much for that. But let's keep it with that, because I'm listening to the MD of Neogen Chemicals, Hareen Kanani, about this deal as well.
We've been entering into an agreement between Neogen and MUIS. So MUIS, it's a landmark agreement. So MUIS stands for MU Ionic Solutions Corporation Japan. It's a subsidiary of Mitsubishi Corporation. And this is going to be a first license worldwide given by MUIS to anybody in the world. So Neogen is the first proud recipient of this license. And this is for manufacturing technology for electrolytes in India. So this is going to be a license to manufacture electrolyte materials globally. They will be supplying their globally acclaimed technology and plant design. This will support up to capacity of 30,000 metric tons per annum. So this will support approximately 30 gigawatt hour of batteries.
And well, time for some ET Now insight as we kick off another earnings season. Let's understand what's in store for the fourth quarter of FY23. Will the earnings growth sustain? My colleague Sharad joins in with the street expectations. Over to you, Sharad.
Well, yes, the fourth quarter of FY23 would be in focus as the overall quarterly EPS for Nifty is expected to remain at elevated levels. And do remember, it's expected to come in at more than 220 rupees per share per mark. And the important thing is this entire inflation cooling off will actually boost the EPS numbers going ahead. But let's look at the hardline numbers. The number is 220 rupees per share with almost an implied growth of 3% if you compare it with the Q3 numbers. Now going ahead also for the first quarter FY24 also is expected to rise as high as 9%. So that is something which we'll be watching out for, and of course the EPS growth is on an upward trajectory. Apart from that, which are the important stocks over the next 3 months itself will have the highest EPS growth? And of course, to making in the list in this Nifty space is Kotak Mahindra Bank with almost 18% growth, and also this applies for UPL and Coal India. This is closely followed by ONGC and SBI as well. But apart from this, if you just look at how the performance has been over the Nifty earnings over the last 5 quarters, we see the above numbers which have come in have actually come down below 20 companies in the last quarter which had reported. But do remember, the inline set of numbers have been reported, and that this time in the third quarter itself it has gone more than 50% of the total Nifty stocks. Now looking at the important thing is the valuations part, and over here we see for FY23 it's almost at 18.5 times, but going ahead it's expected to go to almost 17 times in the next 2 years. Apart from the valuations, the EPS is actually in focus, and do remember when the year had started FY23 it was around 837 rupees. It went up to almost 847 rupees after the fourth quarter of FY22, but currently as on 31st March it stands at 830 rupees per share.
Okay, thank you so much for that, Sharad. But yes, we will be starting and kickstarting the earnings season with IT companies. Now, are margins in the recovery mode for the IT sector, and is the worst actually behind for them? TCS and Infosys will soon kick off that fourth quarter earnings season. Anisha is going to be telling us what to expect from the sector. Anisha?
The growth can be anywhere from a decline of around 0.5% to a growth of almost 1%, while TCS is expected to be the leader of the pack with an outperformance coming in with respect to the revenue growth. That's the expectations from Jefferies. However, the valuations have become a lot more comfortable. So TCS as well as Infosys for you on the screen are trading below the 5-year averages, wherein the likes of HCL Tech, Tech Mahindra, Wipro too are a bit comfortable close to the 5-year average. So there is a bit of room available, and if you compare it with the valuation that were there in the year 2022, there's a massive upside available on the counter. So going a bit muted into the earnings, let's see whether they are surprised positively or continue to move on the downside.
And moving on to real estate, the sector was abuzz in trade yesterday, in trade, and the stocks were on an uptrend given the certain tailwinds. Now, with RBI's move to hit pause on the repo rate hike, what remains to be seen is how this impacts the home buyer demand in the days to come. However, companies are seeing record sales in FY23. My colleague Vamakshi is here with all the data and what this means for the sector overall. Over to you, Vamakshi.
It has turned out to be a record year for real estate players. Let's first start off with Macrotech developers. Now, the company has reported pre-sales in FY23, and in fact, they've surpassed their guidance of around 11,500 crores. In fact, it is also happens to be the third consecutive quarter where the company has clocked in pre-sales of over 3,000 crores. Now, as far as Godrej Properties is concerned, their annual booking is nearly 22% ahead of their full year guidance. In fact, they're targeting pre-sales of nearly 20,000 crores by FY26. As far as Sobha is concerned, they forayed into the Hyderabad real estate market in the fourth quarter, and in the fourth quarter itself, the average price realization has also seen an improvement of nearly 20% year-on-year. Ajmera Realty is also in focus as the company has aims to double its launch pipeline in FY24 given the good momentum that they're seeing in sales, and in fact, they're targeting 2,000 crores of gross sales. So overall, a strong operational update so far, but it is also interesting to note that developers have managed to sustain pre-sales in the last 6 quarters. Now, as per a recent report by Avendus Spark, aggregate pre-sales have reached between 10,000 to around 12,000 crores for companies within their coverage. But at the same time, in the last 6 months, realty stocks have definitely taken a beating, with stocks such as Sobha as well as India Bulls declining by over 20%. Other counters like Phoenix Mills, Macrotech Developers as well as Prestige Real Estate is also seen under pressure. Apart from that, this fall has, when we look at it, this fall has in turn led to valuations falling below or staying at par with the 2-year average. But going ahead, we're seeing a lot of tailwinds for the sector. Repo rate has remained unchanged, which is a welcome respite to home buyers. Q1 2023 end housing inventory is down to 20 months from 42 months that was seen in 2018 as per ANROC, and this in fact is the lowest inventory overhang in the last 5 years. Luxury home sales are also seen boosting revenue, and this segment particularly is seen performing well as well. Apart from that, rising rentals are also expected to incentivize home purchases. So going ahead, the going seems really strong for most real estate players.
Okay, thank you so much for that, Vamakshi. I just want to mark one flash that is going on your screens, that Bitcoin has climbed past the $30,000 mark, and this is for the first time since June 2022. Let's keep an eye out on that. Very exciting lineup for y'all on the market, so do not forget to watch that. But let's go across. Ashesha is here with us in the studios to tell us what are the stocks that we should be keeping an eye out on this morning? Ashesha, very good morning. Which stocks are on your radar today?
Hi, good morning. So it's the season of operational updates. So we'll start with one of those stocks. Bank of Baroda will be in focus on the back of their operational update. In fact, strong data has come in from the company. Total advances for the quarter gone by have grown by about 19% on a year-on-year basis, while deposits have grown by about 15% on a year-on-year basis for Bank of Baroda. Apart from that, Kalpataru Power Transmission will also be in focus, and this is on the back of order wins. The company has informed the exchanges that they won new orders worth about 3,100 crores in the month of March and in the month of April so far. SBI will also be in focus, and this is on the back of the fundraising plans that the company has informed the exchanges about. They will be meeting on the 18th of April for $2 billion fundraise, which will be done via debt. IRB Infrastructure Developers, where toll collection data is now out. March toll collections have increased by about 21% on a year-on-year basis, as they stood at 370 crores. Star Health, on the back of operational updates for the month gone by, where gross direct premium underwritten has increased by about 13% on a year-on-year basis. Vedanta, meanwhile, will also be in focus, and that is because Supreme Court has permitted the company to carry out activities at copper smelter plant in Tamil Nadu. Ugro Capital, remember the company had informed about their fundraising plans in the last week of May, and now they've said that QIP has now opened and the floor price has been fixed at 149 rupees per share, which is a discount of about 7% to yesterday's closing price. Lastly, Shilpa Medicare will also be in focus, and that is because they've received US FDA approval for its arthritis drugs. On the back of this approval that has come in, Shilpa Medicare will also be in focus today.
All right, thank you so much for those details, Ashesha. We will keep an eye out on all the stocks that you mentioned. But the FII flows remain net negative in the second half of March, with financial services seeing the largest outflows. However, capital goods see the second consecutive fortnightly inflows. My colleague Somit has all the details, and he will let you know that. Over to you, Somit.
Well, if you see in the second half of March 2023, the FII flow was net negative at around $564 million, and the net outflows for the first quarter of 2023 stood at close to $3.2 billion, and this is despite the big bulk buying that we had seen in Adani Group stocks by GQG Capital. Now, in the second half, if you see, the energy sector has seen the largest outflow of close to $550 million, followed by the IT sector. Now, interestingly, if you see in the IT sector, the FII underweight stance as compared to the MSCI has reduced, which indicates that there has been a slowdown in selling by the FIs over this counter. Now, currently, if you see, the FI holding in the IT sector stands at close to 11%, which is significantly lower compared to its last 3-year average, which stood at close to 12.8%. Now, financial service was the another sector that saw an outflow of close to 407 million US dollars in the second half of March 2023, while the FI ownership in stance, if you see, is currently overweight as compared to the MSCI. However, that has declined by around 15 basis points. That is, the overweight stance has declined by around 15 basis points. Now, the overweight stance has been continuously declining since its peak that we had seen in mid-Feb at close to 8.4%, and currently it's at around its 6-month average levels at the current moment. Now, on the inflow side, if you see, capital goods, materials and FMCG sector saw inflows from FIs for the second consecutive fortnight, and FIs continue to remain overweight when it comes to the capital goods sector, while they are underweight on materials and FMCG. Now, given that the financial year has also ended in FY23, if you see, FIs have pulled out more than $5 billion US dollars from the Indian market. IT sector has seen the biggest outflow at close to $6.5 billion US dollars, followed by energy sector and financial, while on the inflow side, capital goods saw the largest inflow of close to $3.1 billion US dollars, followed by FMCG and healthcare.
Okay, Samit, thank you so much for that. But, do hold on with us and talk to us about Kotak Mahindra, because that is going to be in focus as well, as FI has actually declined. FI has declined by 1.47%, and Nuvama has actually stated something that it sees a possibility of a higher weightage in the MSCI in May 2023 review. What is all that about, Samit? Could you give us more details on that?
Well, if you see the March 2023 shareholding pattern that has been declared by Kotak Mahindra Bank, what we are understanding is that the foreign holding in the bank, that is the FI holding in the bank, has declined by around 1.47 percentage points to close to 41.22%. Now, this could result into headroom for the FI holding increasing to around 25.05% versus the earlier limit of around 22.38%. Now, as per the MSCI rule, if the foreign headroom is less than 25% but equal to or higher than 15%, then the price adjustment factor stands at around 0.5 times. But given that, and this was the case for Kotak Mahindra Bank so far, but given that the FI headroom for Kotak Mahindra Bank has now just increased above the 25% mark, the price adjustment factor for Kotak Mahindra Bank would now be around 1 time. Now, as per MSCI, as per the shareholding that has been released, there is a high probability that the price adjustment factor could be adjusted for Kotak Mahindra Bank in the May 2023 review, and there's a high probability that the weightage of Kotak Mahindra Bank in the MSCI index could increase. Now, as per Nuvama, the potential increase in weightage could lead to an inflow of close to $690 million US dollars, and the stock has been languishing in trade, and this could be an upside trigger. That is, the MSCI inflow could be an upside trigger for Kotak Mahindra Bank. Now, apart from Kotak Mahindra Bank, there are also a host of other stocks that would remain in focus because of the MSCI May 2023 review. Firstly, there's a possibility that ACC might be removed if the stock continues to trade below the 1,730 rupees mark. Hindustan Aeronautics has a high probability of inclusion, whereas Indus Towers has a high probability of exclusion from the MSCI index. And lastly, if you see, Power Finance also remains in focus, because if that stock continues to trade above the 160 rupees mark, then there is a high probability of the stock getting included in the MSCI index.
All right, thank you for that, Samit. And moving on, we have quarterly updates flowing in. Now, Bank of Baroda has also come out with a strong Q4 update, with gross advances as well as domestic retail advances seeing a sharp spike in the quarter gone by. We have Vamakshi in the studio giving us all the details. Do tell us what is the Q4 update for Bank of Baroda, Vamakshi.
Well, absolutely a strong update that has come in from Bank of Baroda. When we look at the gross advances in the Q4, they grew by around 19% on a year-on-year basis and 5% sequentially to around 9,74,000 crore. Domestic advances grew by 17% year-on-year, 5% quarter-on-quarter to 8 lakh crores, and this is ahead of the system. This was led by domestic retail advances growing by nearly 27% on a year-on-year basis. So very strong growth coming in on the domestic retail advances. And in fact, Bank of Baroda has delivered domestic retail advances growth of over 25% for the Q3 in a row, including Q4. Domestic deposits have grown by nearly 13% on a year-on-year basis, and this has driven a domestic loan to deposit ratio to 76%. However, the CASA ratio declined. It fell by nearly 134 basis points quarter-on-quarter to with 37%. We also have a note that has come in from Citi on Bank of Baroda. Well, they see room for margin expansion for Bank of Baroda, and they're expecting PAT to more than double on a year-on-year basis in the fourth quarter. And given all these positive factors, Citi has given a big thumbs up to the Bank of Baroda, maintain its buy rating, target price of 210 per share, which is a good upside from the current levels of 166 per share.
Okay, Mamakshi, thank you so much for that. But Ashesha, coming back to you, Bajaj Auto is also actually set to take over all of the Triumph motorcycles sales and marketing operations in India. What is that update on that front? What is happening here?
Well, yes, Bajaj Auto will be in focus today. In fact, they made an exchange filing yesterday where they said that they will be managing all existing dealerships of Triumph in India. It has about 15 dealerships currently in India, and Bajaj Auto now intends to expand it to over 200 units over a period of next 2 years. Bajaj Auto will manage Triumph's India sales as well as their marketing operations. Let's also understand what this transaction means for Bajaj Auto. Bajaj Auto already operates 4 exclusive dealerships networks. Triumph dealership will be the 5th exclusive retail channel under Bajaj Auto Group. New mid-size Triumph motorcycles are all set for 2023 launch. Bikes will be built at Bajaj Auto's Chakan plant, and all of these bikes will be exported as well. So on the back of this announcement that came in yesterday, we have a brokerage note. Morgan Stanley in fact has written where they say that Bajaj will initially focus on creating a pull brand rather than pushing on volume growth. They say in a bull case, Triumph can add about 397 rupees per share to Bajaj Auto, which indicates a 30% upside from the current market price. They expect Triumph to reach 30% market share by FY26, monthly run rate of about 39,000 units and margins at about 25%. So this announcement came in yesterday, but the note has come in today and quite positive. And on the back of that, Bajaj Auto will be in focus today.
All right, Bajaj Auto in focus. Thank you for that, Ashesha. But we also have Vamakshi in the studio who's been scanning through all the brokerage notes that came in this morning. Tell us, Vamakshi, what are the stocks that we need to keep an eye out for?
Well, absolutely. Let's first start off with Indigo. We have a note that has come in from Morgan Stanley, and they're highlighting that in Q4, they're expecting the yields to decline on a quarter-on-quarter basis by 11%. They also expect the company to report an adjusted net profit of around 80 crores. The valuations for this counter seem quite attractive, and in fact, in the fourth quarter, they're expecting Indigo to see 45% year-on-year growth in capacity, which is largely in line with what they're expecting. Now, Morgan Stanley has, given all these factors, maintained an overweight rating on Indigo, given a target price of 2,925 per share, which actually implies an upside potential of over 50% from the current market price. Apart from that, lastly, we have auto shares in focus. Jefferies has come out with a report, and they remain quite positive on the Indian auto space, with the sector in the midst of a strong earnings cycle. They are expecting to see some healthy growth of around 11 to 18% volume CAGR for PVs, two-wheelers as well as trucks over FY23 to 25. They're also expecting to see some strong top-line growth, and better margins should fuel double-digit EPS CAGR. Two-wheeler growth is expected to outpace four-wheelers, and on the back of all these factors, they have a buy rating on Bajaj Auto, Ashok Leyland as well as Tata Motors. As far as TVS and Tata Motors is concerned, they believe they are strengthening their EV franchise as well. TVS, Tata Motors and Sunak Comstars are their preferred picks. They've retained an underperform rating on Bharat Forge, while they've upgraded M&M from underperform to hold.
Okay, Mamakshi, thank you so much for that. Those are the brokerage notes that we're keeping an eye out on this morning. But another stock that is actually going to be in focus is going to be MTAR Tech, because there was a management meet that happened, and there were certain updates that have come in from this management meet with analyst Sharad. Please tell us, what are these updates that we're getting in this morning? How is it looking like? What are the key highlights from this management meet?
Well, yes, the stock is in focus, and do remember the stock deals in the niche category of manufacturing, and the entire focus is coming especially on the clean energy segment. Now, that roughly contributes almost 65% of the total aggregate book order of almost 1,200 odd crore rupees, and the management has stated that this will be the fastest growing segment going ahead, and they are also planning to foray into the energy storage systems. Now, that requires a capital outlay of roughly 150 to 200 odd crore rupees over the next 2 years. Apart from this, strong management commentary also also coming in, especially when it comes to the new orders in the nuclear segment. They're expected to kick in from the first quarter of FY24. Apart from this, the company itself is actually working on new technologies for the hydrogen electrolyzer. Do remember, this is basically a clean energy segment component going ahead, and this will be actually functional for the next 18 months where the company will be working on this technology. Apart from this, the company will also ramp up its electrolyzer production. Now, this is expected to happen from the end FY24 and to also make fuel cells by FY26. And lastly, they have reaffirmed the guidance when it comes to growth of almost 45 to 50% in terms of revenue. And this will be led by fuel cells, space, as well as the nuclear segments. Now, of course, do remember the stock itself has also been buzzing, and over the last 6 sessions, the stock is up 9%.
All right, thank you for those details, Sharad. Moving on, India's largest broker, Zerodha, is expecting its revenue and profit to have expanded by a fifth in the fiscal year ending March 2023. But there is a major correction ahead for the stockbroking firm in the current fiscal, according to its founder and chief executive officer, Nitin Kamath, to Economic Times. He says that the revenues dip has not kicked in yet, and they will probably end FY23 with a 20% higher revenues versus last year. But he is unsure of hitting this number next year. He says that the stock market is competing with other securities such as treasury bills and gold. He adds that if markets continue like this, there will be a 30 to 40% dip in the revenues.
Okay, and in the latest edition of CEO at Work, we caught up with Axis Bank's MD and CEO Amitabh Chaudhary to understand the way forward for the industry. And the fourth largest private bank in the country, he remains quite confident about gaining the market share across segments. Let's go across and listen into the snippet.
At any point in time, if given, for example, let's take Axis as a case, our market share in deposits is close to 5%. Our market share in advances is close to 6%. Should I really be worried about whether can I gain market share and can I do better than the industry? Well, if my platform is right, my strategy is right, I'm executing well, I should be able to gain market share, which should reflect in my increased profitability, which should reflect in being able to maintain margins. Now, this is subject to some number of factors I mentioned. And that's what I'm telling people within Axis, that if we have worked so hard to get the platform to this level, we should be able to, given where we are, should be able to build on it and do better than what we've done in the past. Why should I worry so much about whether 100 is going to 106.5 or is it going to 107 or 108? There is enough to be taken from 100 itself, and that's what we should be focused on.
So the basic thumb rule for Axis Bank historically has been that it's at a multiplier of 1.5. Will that be the thumb rule going forward as well?
Well, as I said, end of the day, when we talk about ranking also has somewhere market capitalization built in. So yeah, we would like ourselves to be rated at similar levels as some of my friendly banks are. We have work to do. Market needs to be convinced, and if the market is convinced, hopefully it will get re-rated on some day. I think we have to still do a lot of work, establish sustainability, more credibility, and as we do that, hopefully it will reflect in our multiples also. Till then, I have to keep working hard.
Watch that full conversation only on ET Now. Moving on, Samir Arora, who's the founder and fund manager of Helios Capital, believes that India is a big beneficiary of global volatility. But what are his views on IT and the new age tech stocks? Let's listen in.
I expect this year to be positive and double-digit positive. And some of it got delayed a little bit because I was expecting the US to have settled down when I was saying this end of last year, and that has got delayed a little bit. But broadly, you are absolutely right that the worst is over and things are stabilizing, and India is, even though in performance-wise has done badly, we can say, but and that is related to China and others, but every day if you see books, if you see discussions, if you see Twitter, if you see Economist cover, everywhere this issue of China versus US is heating up. and that has a big influence on big picture flows into China and corporates going into China and everything associated with it. And India is a beneficiary on that big picture theme for, it'll be a beneficiary for I think many years, but on the margin, a big deal for India.
Samir, so can we assume that the local crisis, which was largely because of Adani and trade deficit, that's behind us, and global crisis, which was largely because of inflation and US regional banks, that's also over?
I would think out of this, what is happening to the US banks in theory, I don't think is over. We are hoping that the system can handle it, because the actual losses in terms of mark-to-market losses and what percentage they are of US banks and particularly smaller banks and regional banks, that number may be quite high, which basically means that the system has to remain in stable condition so that there is no panic triggered by these things. I think that is one angle on which I don't have a strong handle as to how to do it beyond just being a strong, that means for the Federal Reserve or for the FDIC and others to be signaling that they are anyway there for any bank that needs their help. Other things I think are over or getting
over. Samir, for the longest time you've maintained that you've not liked IT and that call has worked like a charm for you. But after the bout of recent underperformance, is it time to think contra now?
So far I'm thinking that I will be able to handle any pain if IT does well immediately, because it's not likely to do very well. It might go up in line with the rest of the market in case I don't mind. But right now I would not think that why I should step in immediately. First, let's see the guidance of Infosys. TCS, I guess, will not give any guidance. But if you read, like today or yesterday, it came that one of these companies is not honoring commitments to freshers. I think that is as bad as it can get. Now you may say, therefore buy when things are bad. But as you separately see, our Indian system doesn't accept openly that there is a slowdown. They say we will be beneficiaries of cost, this thing.
Okay, and on that note, we're absolutely out of time on this edition of Market Cafe on ET Now, as checks Nifty as of now, indicating a muted start for the Indian market. So don't go anywhere. The market will take the action forward and keep you updated with all the news about it.